Hello and welcome to Nutmeg's Investor Update for August. I'm Neil Alexander, Chief Financial Officer at Nutmeg, and today I'm joined by Shaun Port, our Chief Investment Officer. Hi Shaun.
Hi Neil.
Shaun, can you tell us a bit about what's been going on in the market?
Well, July was a bit of a roller coaster month actually. Investors are fretting over when and how central banks will start to unwind all the emergency policies they put in place after the financial crisis. It's also been a busy month for company earnings, which tends to move markets. So ultimately, both bonds and equities produced gains in July, which was good. And for equities, global equities, this is the 8th consecutive monthly rise, and that's only happened about 5 times since 1970. So that may sound a bit scary. And, is it a harbinger of doom that markets are going to fall from here? Actually, in those episodes, it's normally led to further gains in equity markets. So it's actually quite a positive development going on in world stock markets at the moment.
Okay, thanks very much. And in light of that, how have the Nutmeg portfolios performed?
Yes, across all the risk levels, managed portfolios delivered positive returns in July from around 0.1% up to 1.4%. Mid-risk portfolios delivered around 1%, which we're quite happy with those returns. In that context, the FTSE 100 delivered a return of 0.9%. Europe and Japan were barely positive. US a bit better, and really I want to highlight that emerging markets delivered a 6% return last month. So clearly emerging markets are delivering good gains for our portfolios at the moment.
Okay, and in amongst all that, what changes have you made to the portfolios?
Yes, in early June we sold all our gold holdings. We've been holding gold as a degree of protection in portfolios, and we've switched a lot of that exposure into US bonds linked to inflation, which we think are a better hedge in our investors' terminology, better help us with some of the risks in markets. We've also added to our emerging market exposure, and to highlight, in our highest risk portfolio, in the highest portfolio 10, we now hold over 14% in emerging market stocks, with normally we'd expect to hold about 8% over the long term. So we're quite optimistic in emerging markets. We think we're going to get better gains from there before, and that's because global trade is improving, the economies are improving, even commodities are starting to join in this sort of encouraging gains we're seeing. So we're quite bullish about emerging markets at the moment.
Thanks, Shaun. And next up, as usual, we've got a question from one of our customers. This question comes from Lara via Facebook. And Lara asks, although our portfolio has remained relatively flat, slightly better over July, there have been some big ups and downs in the month. And what's caused this?
Actually, financial markets this year have been relatively calm. The volatility in markets has been much lower than we would have expected from previous years. Now, investors have started to think about how next year will look, how central banks will start to withdraw stimulus that are put in place over recent years. So how will they stop buying as many bonds as they have done in the past? Now, naturally, that's unsettled bond markets and, to a degree, equity markets. So we've seen some quite big one-day falls. But actually, that's relatively normal, and you'd expect to see this over the course of into next year. So as you focus on the long term, all this daily noise is to some extent irrelevant, so you should focus on your goals and invest for the long term.
Great, thanks very much, Shaun.
Thanks, Neil.
And Lara, thanks very much for your question. Hopefully that's given you a better insight into the markets. And as always, thank you to all of you for joining us, and please feel free to contact us by email or via social media on our Twitter handle, or of course you can use the comments box below. Thanks very much.